Hey, what's going on, guys? All right. Welcome to Trend Cloud Trading. And this is our daily podcast that I do for you guys, just sort of promoting Trend Cloud. And I'm going to put the website here for you in the chat. There you go. Kazi, good morning. All right. Copper. We're just looking at that breakout to the upside on copper here, right? Still got mixed signals. Um, Still have mixed signals on that copper. With this copper trade, what's happening right now is we do have the downtrend on that middle time frame, right? Momentum is with us. We're cycling down. Momentum is down. It's just this here, this 50, this line in the sand here. Let's box that out. Right here. Okay, that right there is pretty strong, right? That's pretty strong because that is our line in the sand. That is our line in the sand right there on that high time frame. Right, but we've got a lot of momentum with us. So the only thing against us is the trend on that high time frame. So what do you think? I mean, we're cycling down. Momentum is on our side on that high time frame. Okay. Trend is down on the middle time frame, and momentum is below that negative 100. A lot of force there, right? So what would be the key factor here to really start taking this short? And that would be going to that opening range breakout. And, hey, guys, look, let's see if we can get a breakout to the downside and then a retest, right? That's what I think. Yeah. Oh, nice. Oh, nice, Kazi. Always good to make some money. Oh, they moderated my website. They won't let me put. That's interesting. Huh. Why are they doing that? They just moderated my website. Okay, guys. Well, that's interesting. I got to figure that out. Let me go over to the YouTube channel here and pull up the YouTube channel and pull up. Whoa. Okay. Welcome to the live chat. Guard your privacy. All right. You got it. I'll give that a heart. Let's see. Let's put the website in the YouTube chat. Interesting. Here we go. 100% it. All right. Oh my goodness. Technology. All of this stuff's it gives me agita. All right. So look, I mean, we've got a process here. Hey, good morning, Gary. Good morning. So look, we've got a great process here, right? We're never confused anymore about what to do. You see how we just very quickly evaluated copper here? We just very quickly evaluated copper because we've got everything on the chart here. Let's go over it. Let's just go over it one more time, right? Because this is every trade. This is no matter what you're looking at. This is a clear evaluation of price action. Okay, so look, 4-hour chart, right? Copper is up. and it's pulling back. It's got these deep pullbacks, right? And you can just go back in time and just look at the history of this thing. It likes to pull back to that 50, doesn't really close below it. It just it sort of sticks to it, right? And then the move up, pulled into the cloud, move up, into the cloud, move up, and now we're back, pulling back to the 50. It doesn't seem to want to, break structure on that 50. Okay, all right. So overall uptrend on that high time frame. But look what we've got here. We're cycling down, right? We're at the top of this cycle, and we are cycling down with momentum to the downside. That's the high time frame. That's very powerful. When you're cycling down and your momentum is down as well. Okay, that's a lot of force, especially on a high time frame. And then go to your middle time frame and look what we've got. Downtrend, trend cloud is red, candles are red, and we are below negative 100 on that CCI. So we've got all of this in confluence with each other, right? So, the only mixed signal that we're getting here is this, the fact that we're in this upward trend. So look at this. This is the area right here. Okay, we'll box that out. That is the area in question that we have to really break through, okay, on the high time frame to make some progress. What's that going to look like on the low time frame? Well, engage that opening range breakout tool, right? If we see a breakout to the downside here, we can definitely take that retest, right? That would be the move. But you see how we put our process in place? We put our process in place and just, that's great. That's exactly what you're supposed to do, Gary. That's exactly what you're supposed to do. Absolutely. Yeah, I am available for you anytime. You can give me a call, you can shoot me an email, whatever. I am here for you. But you see how nice that process is? So putting that trend cloud process on your chart, it's all about having a system that maps out price action in an intelligent way, right? In a way that you can understand it. And color coordinating the charts is probably one of the best. We'll go over this a couple of times, and then we'll go start looking at everything. Okay, crude oil is still forming the opening range. It's 911 right now, 912. Okay, right. So copper uptrend, high time frame. Okay, now we're in a corrective phase on copper because we're cycling down, right? Momentum is also down. So you've got a corrective move with a lot of force. Okay. Even though it's an uptrend, you've got a corrective move with a lot of force. So you have to say, where is this corrective move going to end? Well, it's going to end, if indeed it is going to do something like this, okay, if it's going to do that, where is that going to take place? Well, you can only trade what you see, right? You can't guess. We don't have a crystal ball. And what do we have here? We've got our trend cloud line in the sand, right? This is our line in the sand between uptrend and downtrend, right? Pulls up, went through the trend cloud, right little past that line in the sand. And we were saying, okay, what's going to happen here? Is it going to do this? Or is it going to recalculate and move back up? And that's what it did, right? It recalculated and moved back up, but it didn't break through any structure, right? It didn't break through any structure there. And now we're pulling back again to that 50 line in the sand right there. Okay? And that's where we're at right now. That is where we are at. Now, you can't ignore this. You can't ignore this. You can only observe, make a mental note, but you understand the overall understanding of what's going on here is what's important. Okay? So, this is always your line in the sand here between uptrend and downtrend. All right? So, right now, this is looking like it wants to do something like this. So this is how we're just planning this out, right? It came up, pulled back to the 50, then made a move up, pulled back to the 50 again. If it breaks through structure here on the high time frame, then we start looking for, longs. If on the opening range, if on the opening range, we start breaking to the downside here, then we have a good chance to take something like this, right? Because we have momentum on the high time frame with us. We have momentum on the middle time frame with us. We have trend on the middle time frame with us. Okay, what's it doing here right now? Pulling back into that trend cloud, isn't it? It's pulling back into that trend cloud right in here. Maybe it does something in here. Does it want this right here? Okay. Does it want that rally-based drop? Possibly. Okay. That is a possible bull trap. But the fact that we're in, this rally-based drop here, it didn't break structure here, right? It didn't break a major piece of structure. It broke a minor piece of structure. And Gary, that's a one of the big lessons in the membership course. Understanding the difference between a major break of structure and a minor break of structure. So let's go over that real quick right now. Okay, let's erase all of this. So if we're looking at this swing here, swing high, swing low. Everything else in here is range bound, right? Everything else in here is range bound. So if price does this, that's a major break of structure. Major break of structure. It didn't do that. It came up. It came up to here, pulled back, and then did this, right? This right here, this leg that broke this little piece of structure, that's a minor break of structure. Minor break of structure. Okay? So you get it. You understand. The full leg, the swing here, the controlling swing high and the controlling swing low, those are the major levels. The minor levels are the ones that take place inside of that range. Okay? And you can see it represented on the high time frame as well. Here's the swing low, swing high, and we're kind of just bouncing around. Okay? I'm sorry, right here. Swing low right here, swing high right here. And now we're just kind of bouncing around. And it's the same view on the middle time frame. So major levels of structure, minor levels of structure. Minor levels because it's inside of that range. Okay, so what did this rally base drop here, rally base drop, right? This rally base drop came down, didn't even break through this minor piece of structure here, pulled back, and then it broke through. Okay, so this formation only broke a minor piece of structure right here. So this is not as impressive, right? This is not as impressive. So you see how you have to really look at these supply and demand zones and not just take every single supply and demand zone. I mean, you can, but look, it's not as strong. So you really want those supply and demand zones to be breaking major levels of structure. All right. So in order to find that out, in order to see that, you would have to just box that out. And I like to use just a thick line. Just use a thick line for that major break of structure or those major levels, and just always box that out. Where's the swing high? Where's the swing low on that middle time frame? Okay, box it out. There you go. Now, when you see, stuff form like this, you'll say to yourself, well, yeah, okay, this is okay, but it didn't break that major piece of structure. If this did something like, this, now you're in business. Okay, now you're in business. Or, perhaps rally base drop breaks a major level of a major level of structure, then something forms in here, like maybe this is a drop base drop that forms. Okay, now you've got two zones there, right? Totally legit. Okay, so I'm glad this is a good lesson. So this is all being recorded on YouTube, and I will cut that from YouTube, or copy that from YouTube and put that into a little mini lesson. Okay, because that's super important, guys. That's super important. And it kind of looks like this thing is going to make a drop base drop right here, and if it does, we will have something to really write home about on our opening range breakout here, won't we? Right. So this is forming a rally base drop on that 15-minute chart. Okay, and if it does something like this, right? Oops, it's not going to let me grab it. Right? If it does this, Yahoo! Right? Maybe it comes down. That's a previous day's low there. There's a lot of support down here. So we might get something that looks more like this, where it retests this area and then pulls back in here. I would not mess with that then. Okay, I would not mess with going short, even if it's short-lived, because that's really against the trend, right? We in order to go short on this copper, we're going to need to see something at least like this. It's got to break that level. Okay, makes sense, right, guys? I mean, that makes sense. Yeah, it might be something like this, right? This rally base drop breaks through some structure, then we take the retest into here, and you negative 100. And that will be really good. That will be great. That will be great. All right, let's take that concept and just use it throughout the day here. Let's go over to the S&P. Is that level drawn on the 1 hour or the? Oh, good question. Yeah, that level right here. It looks like both, Gary. Right. So right here, you can see the makings of that rally-based drop, broke minor structure on the 1 hour, and then right here. Okay, that's up here. See, so up here on the 15-minute chart, looks like a little consolidation pattern. So the top one is the rally-based drop on the 1 hour, and the bottom one is the rally base almost drop here. This is still forming on the 15-minute chart. And you can do that. You might see a formation on the 1 hour chart, but it'll look like this on the 15. It's going to look even worse on the 5, right? So, that's when you go to something like the 30 and say, there it is. Okay. Rally base, not so great on the 30 though, right? Because leg in, base, 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 leg out. Okay. So 15-minute rally, base, base, drop right here. Or even rally, base, 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 drop. Okay, so looks best on the 1 hour chart, right? Looks best on the 1 hour chart. But again, it didn't break any structure. It broke minor levels of structure. So we're not really thrilled with this. We're not really thrilled with this. The thick black line. Yeah, it's actually, in this particular case, it's both. We drew this out on the 1 hour, right? We drew this out on the 1 hour here, and it happens to also be the high time frame as well, right? Top of the swing, bottom of the swing on that 4 hour chart. And it's represented on the 1 hour chart in the same respect there. Yep. Good question. All right. So that's copper. What time is it here? 27. All right, let's go over the crude oil first. Micro crude, what's going on here? We had all this set up. Okay, let's clear the chart here. And let's see what we're doing. Right, micro crude. Oh my goodness, get out of there. Micro crude is still in this very strong downtrend. Very strong downtrend. Now here we have the opposite, right? Here we've got the opposite. We've got a downtrend on the 4 hour chart, but we're cycling up and momentum is up. All right. So that's high time frame momentum is against us in any kind of short. So we don't like that, right? We don't like that, especially on the high time frame. We still have the momentum to the downside. So any trade that we decide to take, we're definitely looking at 2 to 1, okay, or 1 to 1.5, something to give us a little bit of an edge here. And why is that? Think about it. We're taking the context of the trade from the high time frame. Hey, good morning, Mariana. Good to see you. We're taking the context of the trade here on the high time frame, as always. So we're in a corrective move with momentum going up on the high time frame. Remember, high time frame is always more dominant, right? Because there's more people looking at it, and it's just more significant. So this is in a corrective phase, right now because it's telling us, right? We're cycling up, momentum is up, and where's that corrective phase going to end? Well, the first stop, right? The first stop is somewhere inside the trend cloud. So when you're in a corrective phase on the highest time frame, you really have to look at the first stop on, or what I mean is the first level of resistance on that time frame. So whatever time frame you're on, if you're in a corrective move, you have to look at that time frame's trend cloud and say, okay, this is the first area of resistance. Then we've got, all this, right? This is our line in the sand. So maybe does this want to go hit that line in the sand and then rebound out of it? We don't know. Look left. What do we have here? Right? We've got this right here. Draw it like that, tighten it up. We've got a supply zone on the 4-hour chart right at that 50. Now, is it going to go from here all the way to here today? That's a lot. That's a lot, right? What's more realistic for today? This pulls back, hits the top of that trend cloud, which is more so right here, right up here. You see how it just guides us right to these levels? Look where that's at. Look what we've got right there. Okay, so now we've got the middle time frame trend cloud inside of a middle time frame supply zone that's also hitting the high time frame trend cloud. That's a great area. That's very suspect, right? This is like, remember, watching that bus drive down the street and saying, okay, I'm going to guess which way this bus is going to go. And you look for the blinker, you look for a roadblock, you look for, a detour sign, something. You're looking for evidence, you're looking for information that's going to give you some sort of guidance as to what this thing is going to do. And that's what we see here, right? So we are in a corrective phase on micro crude and on the high time frame. So where is that corrective phase going to end? Well, here's that top part of the trend cloud. That's the first area that is in question. And it's also a supply zone on the 1-hour chart. What's that look like? That's pretty high up, right? That's pretty far up here. Okay, but it is what it is, right? It is what it is. So, let's take a look and see what we've got. Rally base drop right here. You can refine it a bit more. There you go. Okay. So 15-minute rally base drop right there. I mean, you can really just do all the wicks. Okay. And that's what you've got. Okay. So that's the situation. So we really, if we take this short because we're looking at a downtrend and we're ignoring this, what I'm saying is this short might be short-lived. So let's put on the opening range and go to the 5-minute. Let it just calculate. There you go. So it's forming that right now. And that's where we are at. All right. So it tried, here's the opening range. It broke a little bit to the downside. It broke to the upside. It's kind of confused, right? It's confused because we got mixed signals. We have two strong downtrends with momentum right now, middle chart. That is the momentum of right now. And it's down, right? So we got down, down, trend, down on momentum. So everybody's kind of looking at this going, oh, you should really go short on this. But yet we're in a corrective phase with momentum to the upside here. So probably, not the best situation, right? We want to be in the situation like this. If this is what we were looking at right now, right, guys? Downtrend, cycling down, momentum down, high time frame, downtrend, middle time frame, below negative 100. Everything's down. Great. Start looking for the breakout and then the retest all day long. All day long. But that's not what Trend Cloud is showing us, right? You don't make it out to be anything else other than what it is. You're in an uptrend. I mean, you're in a downtrend on high time frame, and momentum and cycling up. So it's telling us this is the situation. And where's it going to stop? It's going to stop somewhere at a level of imbalance right here. Something that has a trend cloud component to it, which is our resistance area. So we have that, but that's all up in here. And we've even got our line in the sand, right? Maybe it comes right to that 50, hits it, and bounces off. What else is considered a level of resistance? Grab your Fibonacci retracement tool, right? And you go from swing high to swing low. 786 retracement level. How many times have we seen that? Right? Crude oil loves that 786 retracement level. And that's right at the 50. So we've got a couple of retracement levels. Let's see if we have any ratio confluence here. Go to your 4-hour chart and do the same thing. Swing high to swing low. And look what we've got. We've got some ratio confluence. See that 5? So on the high time frame, the swing from here, from swing high to swing low, is a 50% Fibonacci retracement level. So we've got a cluster of retracement levels across multiple time frames. I love using Fibonacci. I'm going to write that down actually and do a video on that. Fibonacci across multiple time frames. Because that's super useful, right? That is very useful. So that's another trick that you can use. It's really not a trick, right? It's technical analysis. So there you go. All right. So crude oil, Kazi, I don't know, man. I'd be cautious. And then you've got, the reports coming out today as well. Got reports on crude coming out. Let's check out natural gas. What's the story on natural gas here? Okay, here, let's get rid of this. Natural gas, high time frame downtrend, right? And we were cycling up, and now we just started to cycle back down. Okay, so but momentum is still to the upside, right? So we are getting, and it's reacting off of that opening range. Okay, so this reaction here could be short-lived, right? Downtrend on the high time frame, downtrend on the middle time frame. Momentum is down as well right now on that middle time frame. But this thing's breaking to the upside. Is this breaking to the upside because of this, the momentum, from that high time frame. Where is this thing going to end? This is in, look at that. This is a very bullish candle here. We had a rejection here. It broke down a little bit lower, and we're getting that rejection. Where could this thing be heading? Look at that. Right inside of your trend cloud on that high time frame. Okay, so that means this would have to go a little bit past, right? Because all this is consolidation, right? This did break, this did break structure up here. We've got this like triple top right here, right? It did break on the middle time frame. What's it look like on the 15? Let's go to the 15 and recalculate. Okay, so see how on the 15, this is consolidation. Nice rejection candle here. So we have a rally base drop. It didn't break through this minor level of structure here, right? Not until here. So this rally base drop actually broke through a major level of structure. And look what's happening. It's ripping through it. Okay. Very interesting. Very interesting. When you start to see a formation that broke through a major level of structure. So let's make that thick line. Okay. Broke through, rally base drop, breaks through a major level of structure. Hey, great. That's pretty powerful. Well, if that gets taken out, that means there's a lot of strength to the upside. There's a lot there were a lot of buyers that had to come in to break that. Let's draw it out too, right here. This right here, make it gray. Get rid of this, right? Rally base drop. Okay. This formation broke structure. Did it break through here yet? Even if we took this, even if we said, oh, it's this whole thing, we're right at the line there. A lot of buyers came in. So if we do break through this, okay, it's probably okay to come back up in here. We don't know what it's going to do. We never know what it's going to do. There you go, broke through. That's powerful. That's powerful, guys. That's why you always want, and there you go. And here is our cycle indicator turning green again. Okay, but we're calling the shots, right, guys? It's not a crystal ball, but we're calling the shots on this because we understand structure. We understand price action and structure, and we can call the shots on this. And that's where you have to get it to. 786. Yep. 786 is very significant on crude oil, Kazi. It loves that retracement level. Okay, so now we're getting a little bit of a rejection off of that level. But this is great observation. We're pulling back. So it's catching it's catching traction off of this high time frame momentum, right? High time frame momentum. We knew something was a little off, right? We knew it because we've got it on our chart. We've got everything on our chart, and it's telling us play by play what's going on here. We've got a play by play on price action. Play by play on price action. Yeah. Okay. So, the plan on this would be to, we need to wait. We need to wait for this to turn around. So it's flashing back and forth now, right? Flashing back and forth. And we don't have momentum with us. We want to wait. let this finish doing its thing, right? Let this thing finish doing its thing. And when it starts to come back around from the top of the cycle, right, and turn red again, like this. We want to be at the top of the cycle, pulling back down. And once the cycle indicator hits this middle gray bar, that's when you know that this right here is the top. Okay? So where's the top? How do we know when this is officially the top of the cycle? Right here. Right at the close of this candle right here. We can officially say, we can officially say right here. See how this hit the middle gray bar. Let me put sorry guys, right there, right? So at this the close of this candle right here, we can say that this is definitely the top of the wave, okay, of the wave, because we've hit that middle gray bar area. Right here, okay, at the close of this candle, we can say that we're starting to cycle back down. Okay, so in this upward trend, this is correcting, right? We're now back into the correction phase. And once it hits that middle gray bar, we can now say this is the top of that wave. And what does it end up doing? Gapping down and making a move to the downside, okay? And momentum is showing it. Goes down more. So that is what's going on here. All right, so we broke through, and it's going to fight now. It's kind of going to bounce back and forth here, and it's bouncing back and forth because we've got that momentum on that high time frame messing with us. So you see how it turned red again, but %K, the little black line, is pointing up. %K always moves faster on your trend cloud indicators. And so it's going to tell you, it's going to give you a little heads up. Okay, and then %D is a little slower. But that's the story. So we've pulled back into this consolidation again, and we're making a reaction off of it. What's that look like on the 5? Right, so this is turning into a bull trap, right? We just don't have, and everything is 2020 in hindsight, right? It's like, oh, I should have taken this. Well, yeah, maybe. You'll never know. We can only line up all of the indicators and say, everything's in alignment, take it. That's all you can do. That's all you can do. And that's all you're supposed to do, right? That's all you're supposed to do. But when you don't have when things start to go wrong, when you go against momentum, you just have to be more cautious, right? Make sure you're managing that stop correctly. Okay, let's go over to 948. So we got the open here. Let's adjust our opening range. Clear the chart. All right. 15-minute. There's our opening range, right? So uptrend, and we're early in this uptrend, right? Very strong uptrend on that 4-hour chart. We are cycling up, right? Where %K is cycling up. Momentum is green, so we've got We've got a good amount of information with us. We're in an uptrend on the 1 hour chart. We're heading above positive 200. And we've broken through structure, right? We broke through a major level of structure, right? Right there. Major level of structure. So on here, here's the high, here's the low on the 1 hour. It came up, pulled down right there. On the 4 hour chart, now, we've got here and here, okay? And because, so this is really cool, Gary. Watch this. So here's the very low, right, on the 4 hour chart. And it pulled back and it didn't go anywhere. Pulled back and it didn't go anywhere. Now it came up, pulled back, and broke through. So watch this, Gary. We're going to bring this, we're now allowed to bring this from here to here. Okay? So why is that? Why are we allowed to do that? Because it broke through structure. Let's do it. Let's do it from down here, and let's just walk it up. All right. Let's say swing high, swing low. Let's turn this off a second and open this up. Okay. Back, breaks through structure and just keeps going, right? So pulls back, breaks through structure. Now we can bring this here, and this, let's bring it here. Goes sideways, breaks through structure. Now we can bring this here, and this would go there. Pulls back, breaks through structure right there, and we bring this here, right? Pulls back, it's still breaking through structure. You really want to break above, close above, right? So it's breaking through structure here. Once this candle closes, we can do that right there, right? And then this line will go as high as this thing is going to go. Pretty cool, right? That's how we're following that price action, and it's represented on that 1 hour chart here. All right, so we'll keep it right there. That's where we are at, but we did break to the upside. So price action is to the upside. Price action is to the upside. And we are breaking out to the upside on the opening range, right? So we can take the retest of this. We can take the retest of our opening range breakout here. And, what do you see right away? You got this previous day's high. You've got which is a previous resistance, right? Previous resistance can now become support. So I would draw this thing just like this. And there's your zone. There's a good zone for taking the trade. Let's go to the risk manager tool and just do it. Go to that risk manager tool. How much is this zone going to cost us? Let's take a look. Entry, right? And where are we going to put our exit? A few ticks down, right? A few ticks below. 1%, $20,000 account. Hit apply. Okay. Wow, you can trade 10 contracts. 2 to 1, 3 to 1, 5 to 1. Okay, there you go. Put that in play. Order set. Ooh, there's a bit of lag. We got some lag here. What's going on? All right, that order is set. It's just lagging on us, guys. Okay, so that's a $200 risk. But because of the size of that demand zone, we can fit 10 contracts. We'll make that bigger. Large, put it to the right. There we go. There we are. All right, and we'll put that right there. See that? Does it very quickly for us. You always want to know, how much is this thing going to cost me? How much is this thing going to cost me? And if you don't pay attention to that, you're going to mess yourself up. You're going to mess yourself up if you don't pay attention to that. So we have 1% risk, 1 full percent risk on this trade here. All right. And there's your targets. And if you want to adjust this, you just click on here and you can adjust it here. You can say, you know what, I really, I want to take another trade. I don't want to go over 2%, loss today or whatever. So put 5 contracts. Now you've got $100 risk on here, and you can go maybe on the on another, maybe we find something else and we put another $100 risk. Okay, now we've got 2 trades in play that are worth 1% of our account. You see the thought process here? You've got to incorporate that into your trading, because if you don't, and you take a 1% risk and a 1%, then you could be out 3%. If you want to take more trades, then you've got to make sure, modify the order. Come on, buddy. You guys get the picture, right? So if we left this at 200, that's a 1% risk. And then we go to silver and we make another 1% risk. Then we go to gold and we do another 1% risk. If all 3 of those trades lose, you're out 3%, right? So just a thought. Okay, just a thought. All right, there's a lot of lag here, so we'll just leave it. We'll just leave it alone. Let's go to gold, micro gold. And let's clear the chart here. Oh boy. Let's hit F5 here. Maybe that will help. Reload without saving. Save and reload. Yeah, save and reload. Let's see here. Let's refresh the charts. Okay, I think that's what we needed to do there. There we go. There we go. Oh, what happened here? Oh, for crying out loud. Okay. So we got ourselves into this long here. And my goodness, what a rejection candle there. So we placed everything, didn't really get that breakout, right? It kind of just went zoop and came right back in there. So maybe we get in really early, right? So maybe we get in really early here. But you're really supposed to wait for that breakout and the closeout, right? Or new structure high. You really want to see that breakout and the candle close outside of here. Okay, so we set this up a little early, right? Well, that's okay. It's all right. Come on. Momentum on that high time frame is with us. Momentum on the middle time frame is with us. Trend is with us. You know, I don't know what's going to happen here, but all I know is that information is in our favor and it's part of our trade plan, right? So, what could be going on here? Let's go over here, and we're high on the curve, right? Let's get rid of all this. So, we're high on the curve here, and it's given us some trouble here. So this is high on the curve. We can draw it like that. So we're taking this trade long inside of the curve here. Okay, so that could give us some trouble, but we don't know. We don't know. We only know that we've got trend and momentum on our side. Does it do a deep pullback? Now we're cycling up. Momentum is starting to flash. Okay, so it's in that high time frame curve. Wow, look at on the low time frame here. The lower time frames, that's really deep, right? That's really deep. So we're taking this thing long right into the curve. We're buying this right into that high time frame curve because we've got trend and momentum on our side, right? Momentum's flashing here, but we've got it here. And we're early in this uptrend. We're early in this uptrend. We're early in this uptrend. Okay. And we could have a deep pullback here. All right, guys. Could have a deep pullback here. Yeah. Okay. Okay. So that is why you want to wait until you have that break above, close above to take the trade. We set that a little too early, didn't we? So now we're in the curve and we're pulling back. Okay. So where is this pullback going to go to? Where is this going to pull back into? Well, here's your first stop, right? Right in here. So now we've got an opening range breakout that is inside the curve, and we are, breaking to the downside here. So where is that going to end? That's right in our 1 hour trend cloud from here to here. Make that green. So you can see this is a really good representation of, oh, well, if we go long or we take some type of bear trap, we're going long right up into the curve. And so you might get a lot of, bouncing around here. So that's the story. So where do we have? We've got the previous day's close. This level right here. So we just got a bunch of areas on the pullback, but this seems to be very strong, and we've seen that, right? We've seen the index. They're selling the rips, right? So this thing rips up, and everybody's like, "Oh, we're going to go into a recession or whatever it is," and stopped out. Yeah, right. Yep. So we are actually, So we are actually inside of that high time frame or that market edge. So perhaps the best strategy: wait for support, wait for some sort of support to see the breakout. Okay. Then we'll have more momentum on our side to do something like that. Right? We'll have more momentum on our side to do something like that. right up into that curve, right into that market edge, making the pullback. We are early in the trend. So let's take a look here. Cycling down. Okay, now it's now we can see here, right? What do we want to see? Well, we want to see this thing do this, right? And we want to see our momentum turn green. We don't want to see this. We don't want to see our CCI indicator break below negative 100. So it pulls back and does something like that, right? That's what we're looking to happen. So we're now in a range, right? So we've got, here's the top, here's the bottom of the range. That's where we pulled this up to. So we can wait until we have a break of structure here to start looking again at this thing, right? And that's not that far away. So this thing breaks here, pulls back. You know, where's it going to pull back to exactly? Well, we don't know. We want to wait until it gets to a point where we start to, where we start to get that bottoming out of the cycle, like right here, like right here, like right here, right? We want to be down here, bottoming out on that cycle and hooking back up to rejoin this. And we've got kind of a long ways to go. All of this, look on the lower time frame. All of this is high time frame curve zone, right? And that's the reaction that we're seeing here. It's as simple as that. Okay. All right. Let's go to the Dow, micro Dow. Okay, micro Dow has not broken out yet. Okay, same thing. We're at the top of a cycle here. We're in our uptrend, and momentum is really strong, and we're in this upward trend here. And we've got a lot of support here. Go back out. Let me go on to that magnet. Yeah. A little more strength here. We broke above just by a hair. We broke above on the Dow just by a hair on that high time frame market edge or market curve. And now we're pulling back. Where's it going to pull back to? Some level of imbalance that has a support component to it. Okay. 9 waves, 10th wave, recalculate. So it pulled back, recalculated, and now it's making the move back up. Broke through. So let's make this gray because we broke through structure there. All right. We broke through structure. Got a lot of support levels down here. We could see a breakout to the downside. Previous day's opening range right here. Sometimes we see it pull back into those areas, right? Rally base rally. What do we have here? Let's get a good understanding of what's on here. Let's recalculate the chart. Okay. Previous day's opening range right here. Box it out. Rally base rally, broke structure. This is the formation that broke structure, and it's fresh. Previous day's open right there. What else we got on there? Previous day's open and the previous week's close right up in here. Okay. Nice area. If this does break out, if we do see some sort of breakout to the downside, we would have a nice zone here on that bear trap. Pretty far away though. And that is below. Okay, so this is going to pull back and it's going to be below our 1 hour trend cloud. Okay, so we do have this. Let's see what this is all about here. Let's take it from that bottom of that candle right to there. What's that look like on our 15-minute? Okay. All right. This is this is not fresh, right? This is really not a fresh zone on that 15-minute chart. Came down, made a move, hit it again, came back in, spent a lot of time in here, and then finally up. So the better move, right? Better zone is right here. Right? A lot of time spent in here. That would be the move. Previous day's open. What's that going to cost us? Okay. Boy, there's a lot of lag, man. Huh? What's going on here? Oh, it did something weird. Huh? What happened here? That's not what I wanted. It's acting a little wonky. It's acting a little wonky here. Right? Where's our $100 trade right there? Okay, there we go. See? Do you see how that Mark Douglas talks about that all the time too? He's like, an ill-conceived trade can make money. Like, we didn't even know what happened there, right? And it was like, hey, we're up $8, you know. 1 minute chart. I don't have PDO, PDH. Oh, previous days have a on the 1 minute chart. It's probably too small. The chart's probably too small to pick up on it, Gary. It's probably too small to pick up on it. Let's see. 1 minute. It's on mine. So what it'll do is, see, they're on there. It's on there. See right here. It's just it's so far out. You have to just go to the higher time frame. It's like we can't see. You can see the lines, but you can't see the names. Previous day's high, previous day's low. See that? You got to go. So like, what is this line right here at the top? Go out to the 15-minute, and we can see some more of them now. So this one is still a little too far out. So this is like a previous week. This is probably the previous week. So let's go to the hourly. This is a month. This has got to be a monthly. Yep, previous month's high. So you got it. We had to go out to the 4 hour chart to see, what that what the tag, what the label was. So there we go. We are below. There's our zone. Uptrend. This is also, this area down here, this zone down here is also inside of the high time frame trend cloud, right? Right in here. Right in there. So if you wanted to tighten it up and do something like that, but I mean, that's that previous, it usually likes going to that previous day's open. We've seen that happen a lot. Right, put it below. And whenever you do stuff like this, sometimes you may have, you may need a couple of shots at it. It goes deeper into this zone, so it might stop us out, and then we'd have to get back in and then put the stop there. Or you just do like this. Like this. Okay, you got to make your adjustment. If you want to use the candles as structure and do like that, you take the middle of the opening range, put the structure there. If that's too much, see how we're adjusting, right? There you go. We made the adjustment. So we're right in the middle, rally-based rally. We've got some support levels, and we're also inside of that high time frame curve zone, right? So if this pulls back, we've got a good chance of doing something. That's pretty far away, right? That's pretty far away, and we're just bouncing around. But the main thing is that you go through your process, and that risk management process is super, super important. Super important, because that is part of the process. Okay, NASDAQ. NASDAQ uptrend. Now, see how the NASDAQ has cycled back down, right? NASDAQ has cycled back down, and we still haven't hit any part of that high time frame trend cloud. Now, this is interesting. Here's your high time frame trend cloud from here to here. What does that look like on that middle chart? On that middle time frame, what do we have here? An extended trend, right? Seventh wave. What does price like to do? Likes to pull back below the 50 to recalculate and then make a decision, right? So this car has been driving on the road for a long time. It's starting to run out of gas. It's got to pull back into the green to refill. It's got to refill. Somewhere in here, there's a gas station, right? For that car to do this, or do this for a while, or do this, right? In which case, it would look like this. This is always the situation. That right there. That is the only possible outcome. Those three things. So it's always good to draw that little scenario on your chart whenever you see an extended trend, right? That is the scenario, the little pattern that you should shape with your eyes and talk yourself through right there. Gold looking good, showing support. Yeah, that's that 1 hour chart. Let's do this. Recalculate. Okay, let's take a look. 15-minute open, broke to the downside, broke through structure. Okay. Down, right? Downtrend on the high time frame. Cycling down. Momentum is down. Downtrend on the middle time frame. Right? Let's get rid of all this. Downtrend on the middle time frame. Momentum is down as well. Great. Great. Broke through structure here. Where's the formation, right? There you go. Right there. And then to the left, drop base rally. Can draw it like that, right? So maybe it's heading for previous day's low, right there, previous day's low. Let's tighten it up right to there, previous day's low. Make that green. So there's a lot of people that are going to be looking at this, right? There's a lot of people that are going to be looking at this to try and go long, right? So we don't know, right? We don't know what's going to happen. We don't know what's going to happen. So we can wait. We can wait and see, or you can take a small chance, right? Now we've got everything pushing down, right? We've got trend is down on both time frames. High time frame, middle time frame, trend is down. Cycling down, momentum is down on both time. Everything's down. Everything's down. So for us to say, oh, this is a demand zone on the high time frame, let's take it, that's just one piece of information, right? That's only one piece of information. So, unfortunately, if this, broke out, if this, does something like this right now, we can take it from here to here as a target. That makes sense, right, guys? Pulls back, right? A lot of force to the downside. Here's your, this drop base drop here. Whoa. I mean, a lot of force to the downside, right? If we get a big rejection candle out of here, and then we break out to the upside here, then we can, start looking at what we've got. But as of right now, the chance to continue the downtrend and to go short is in play. There's more information telling us to go short on this. So maybe 0.5% risk. We don't know if it's going to break through here and keep going. We can see that this is in play, right? But that's just one little piece of info. I mean, look at this, is a lot of force here. This might be a scenario where, it breaks out to the downside and it just keeps going, right? Let's take a look on the higher time frame. Right? We've got this wonky looking thing, right? Look how this thing kind of dipped right into here. So we've got this. Down here as well. It's just one of those things. You're not going to know. You can only trade what you see. So what's, if being that this is the high time frame and this broke through structure, this thing right here broke through structure. So if this is a formation that broke structure and we break through that, that's going to give us a lot of force. Okay, that's going to give us a lot of force to go to the downside. So if we do break through here, then you might have a better chance to take that retest of the opening range. And maybe it does, maybe we start doing one of these jobs, right? Until it has, right? We've all seen this pattern before, right? So do we wait for something like this to happen so that we can take it long again? That's the tricky part of this. So you can only take your process and apply it to the price action. And it's not about you saying, okay, this could be the situation. Let me take a 0.5% risk on this. Let me just take a 1% risk. If you want to focus on gold, then, if you want to take a couple of trades, 2 or 3 trades a day on gold, just take that 0.5%. What's wrong with that? What's wrong with that? You've got an intelligent plan that works and makes sense. What you might be trying to convince yourself of is, oh, Chris, I still don't know which one is going to work, right? That's the level of uncertainty that you have to get used to. You won't know. You won't know which one's going to work, what trade's going to work, what trade's going to fail. But what you can do, and this is the best part, guys, what you can do is just take a smaller risk using a valid process. You've got trend cloud on your charts. We're calling the shots here, right? Like the whole time we're doing this, we're calling shots. We're like, wow, look at that momentum. We've got all this momentum to the downside, and then we start seeing it, right? It all works, right? You just have to use it together, put your process into play, and don't go taking 2%, 3% risks on every trade. 0.5%, 1%. Okay, so if I take a 1% risk per day, that means I got 3 shots, right? That's 3%. Okay. And if all 3 trades fail, well, then you got to shut it down, right? If you want to take more trades, 0.5%, right? Just take that 0.5%. No, there's no shame in it, right? That's why trading a small account, the reward is going to be smaller as well, right? But you want to be able to take that small account and trade a process to it and say, hey, you know what? At the end of the month here, because I was just trading my process, at the end of the month, I'm up 5-6%. And with trading futures, it's really like, it's really like 10 to 15%, because you could make $1,000 in a day, or, even $2,000-3,000 or something like that. You catch a trend, and you scale out of the position, like here, when you on the high time frame, when you see, oh, okay, we've gone down. All right, candles turn yellow. Here's the break above, pulls back, breaks above again. So there's that N pattern, right? Comes up. Let's do this whole thing. Comes up here. Candles turn green, pulls back, and we break through this, right? There's your pattern. Break above, pulls back, broke above that right there. Great. Start looking for those demand zones. And what did it do? It pulled back. Previous resistance became support. Boom. Pulls back, broke above again right here. Let's find some zones, right? Pulls back, and look, it kind of retested again. Previous resistance became support. Broke above again right there. Pulled back deep, right? So you see how the further up you go, and look at that, right? So you can just count these waves, right, guys? 1, 2, 3, 4. In this case, it calculated from here all the way to here. 1, 2, 3, 4, 5, 6, 7 extended. And what happened on that extension? Deep pullback. Didn't break through structure. We got to break through here. Okay, look at that. Didn't do it. Pulled back and broke through again. Now we're super extended, right? This thing really wanted to recalculate. Here's your double top and the breakdown. Retest of that double top, and here we are today. Okay, so what's it going to do? Right? We just drew that out. Draw that out on your chart on gold, and just talk yourself through that. Okay? But it's really telling you, and if you don't have trend cloud on there, just start counting waves. Start counting waves. Okay. Pulls back, breaks above. Right there. Pulls back, breaks above. Right there. Pulls back, breaks above. 1, 2, 3, 4, 5, 6, 7. Hey man, this thing is extended. I don't know if we want to go long on this. We got to wait. It's got to do something. Pulls back. Oh, it gave us one more. Okay. It did give us one more. And then pulls back, double top, breakdown, right? Draw that stuff out, guys. We've seen this before, right? We've all seen this before. This is what you got to do. You got to talk yourself through all of that. Great lesson. Great lesson. Put your trend cloud on there. There you go. It's gonna count everything for you. It'll count everything for you. So we're early in this downtrend on gold. We're early in this downtrend on gold. Okay, it just starting to break through structure here. It did it here, right? Right there. Broke through structure. And we're heading down. Just starting to break through there on that high time frame. Just starting to break through. And if you look left, that's where we're in. Let's box out this this rally base rally. Now this rally base rally here on the 4-hour chart, that took place above the break of structure. That took place. All of this took place above this break of structure. Does gold want to pull back into this drop base rally that broke structure here? Right? We can only trade what we see. That's what we're looking at. Drop base rally. This is the formation that broke this structure on that 4-hour chart. We've got quite a ways to go until that. We've got quite a ways to go. This candle is, so this zone is actually not fresh, right? Because it pulled back, hit that nice rejection, and that, we got a lot of movement to the upside. So there's a lot of people looking at that. There's a lot of people that are looking at that. Very possible. So you have two possible areas that could be used as a turnaround point. That's pretty far. So we do have a good chance here. We do have a good chance here to take gold short a little while longer. Let's recalculate that. Previous day's low. It did break through. And we've got this. Here's your opening range. There is a possibility for this. Okay, nice target. Nice target area. I like that. Previous day's close, put it above that, right? There we go. A lot of force to the downside, man. This we've all seen this scenario before where it breaks out to the downside and just keeps going. And so breakout traders will always say, "Oh, you see, you should have just taken the breakout." Everything is 2020 in hindsight. Everything is 2020 in hindsight, right? The reason why this does not happen as much, this is what happens more. You get a better outcome when you trade the retest of the opening range. But the breakout of the opening range, right? It does wonky stuff like this. You get this scenario. So you get go short, pulls back, stops you out, right? Then it breaks through again and then takes the retest. So it's a toss up, right? But yeah, that's why we don't really like taking the breakout. Breaks to the downside, breaks to the upside, then breaks to the downside, retest. Just take the retest. Just take the retest of that. So that is the situation. The trading situation. Situation room. All right, what else we got here? Go back to crude oil. Crude oil breaking to the downside here. Ah, yes, yeah. 5 minute. Make sure you're on that 5 minute chart. See? Break to the downside, break to the upside, go sideways, break to the upside, break to the downside. So we broke to the downside. We're breaking structure here. And we should have gotten that report out already, right? Some news. Sector update, energy stocks decline, pre-market Wednesday. Okay. Well, we kind of saw all of that happening, didn't we? Play by play. Broke out and just kept going. A lot of force to the downside. And we've got all this consolidation here. Bull trap, right? But we were having those mixed we were having those mixed signals. We had the force of momentum and cycling up, right? We were momentum and was up on that high time frame when we said any type of breakout to the upside might be short-lived. What do we got here as far as curve on that high time frame? Let's go out to the daily. And we're starting to come into this right here, right? Wow. I think there's going to be a lot of people waiting for that $70, around that $70 mark to start going long on crude oil again. They are definitely manipulating that market. Okay. Silver. Right? Silver is doing that crazy dance between let's open that up. Totally sideways. Silver is totally sideways. Totally sideways, slightly down, right? Market edge. Broke through. Right? So we broke through. We were going back and forth here. We were actually going back and forth like this, right? From here to here. That was the situation. And then here's your high, lower high, lower high. So we were forming lower highs, but we were kind of retesting the lows, right? Wasn't necessarily higher high and lower low. I'm sorry, lower high and lower low. We were getting the lower highs, but we were retesting like this whole area here. Now we finally broke through it and we pulled back into trend cloud. right? And now we're starting to get to the top of that cycle, and we want to start cycling down again. And we want momentum to start cycling down again. Jump on that momentum. Pulls back to the 50, our line in the sand, and it's starting to make a move, right? So we still have momentum against us. We still have momentum against us, which is why, pulling back into here. Do we really want to go long here? Whoops. We'd be going long against the trend. We'd be going long against the trend. Maybe this is a false breakout, right? We just don't have enough with us. We are in a corrective move, but we are in a downtrend that just broke structure to the downside. So you have to respect that. It's better to walk away. Hey, have a good day, Kazi. Have a good day, my friend. It's better to walk away and wait for everything to line up than to say, well, we've got this, so why don't we take it? And you confuse yourself when you do that, because if you don't have everything lined up, then what you do is, you say like, oh, it worked. Oh, why didn't I take that trade? Everything worked, even though your plan wasn't fully in place, right? You were just using a little piece of the plan. So your brain remembers that. And then the next time you do it, you're like, well, it worked the last time, even though I didn't use all of the trade plan, and then it fails, right? So it's best to just use the plan over and over again. And that's it. Just use it. Just use it that way. Okay. So silver, you got to wait for some more. You got to wait for some more structure there. Let's go over to that 10-year. Where is that 10-year note? We did well on the 10-year yesterday. We took a trade right here. This was our trade yesterday we took. Upward, right? Uptrend, cycling up. Momentum is up. Uptrend on the middle time frame. Momentum is up. Start looking for those demand zones. Absolutely. Right? Now, this, right? So if you take a look here, if we look on the high time frame, do you see how we are range bound here, right? Here's that move up. Moved up. Pulled back. And broke above. Right? Great. That means that we can do this. There. And there, right? So it broke above, so we can take this, bring it to here now, pulls back, right? But we can't bring this here yet. We can only bring this to here when we get, right? Pulls back and didn't make it. Pulls back again, and here we are. So we're range bound. So if it breaks through this, that would be a minor sign of strength. So once you have a minor sign of strength, you can say, aha, we're probably going to continue up. That's a little bit more indication that we could do this. Okay. Once we break through here, then we can bring this to there, and we would bring this here. That's how we would follow that up on price action. Okay. So that's a great lesson. So I'm going to label this lesson today following price action, major and minor levels of support and resistance, of strength and weakness. And there we go. Well, we got this little triangle, right? Bouncing around, starting to break above. Maybe we're looking at this thing, right? That's a pattern there. Breaks above, finds support on that trend line, and then breaks through here. Same thing. Same thing. Classical charting here, right? Do like that, and do like that. What's it going to do? Wait for that breakout. If it breaks out to the upside, we're in an uptrend, right? We're not extended yet. We're not in that fifth wave yet. So we can break out of this. So if this breaks out, if we break out of this triangle, then we're going to pull back to some level of demand that forms in here, right? Maybe we form some kind of rally-based rally, right in here somewhere. It would look like this, right? That's what we'd be looking for because we're in an uptrend. So we want to assume some type of pattern like this. We want to be prepared for something like that. Momentum on that middle time frame on this breakout, momentum's probably going to do this. And that's what we want. So to pull back into the demand zone, we want to see this. Pull back into that blue shaded area on that CCI without breaking below negative 100. That's what we're looking for. There we go. 2-year note. And we got the same thing there. Same thing. That is what we're looking for. Right? Follow the momentum. We're in an uptrend. We're cycling up. Momentum is up. Start looking for some kind of breakout of this pattern here. Break through some structure here. Pulls back. Like that. So on on those notes, it's some classical charting that we're looking at. Treasury bond. Oh, looks like we're already there on that treasury bond. Haven't broken through structure yet, but we are well on our way. Momentum's with us. We're cycling up. We're in an uptrend. We've got the momentum on our side, right? Broke through structure right here. Where's this going to pull back to? Right in there in that trend cloud. That's the first area that it could pull back to. So where is that on here? Right there. There we are. Pulled back into here. Pulled back, made that gap fill. Look at that gap fill. Look at that gap fill right there. So we can actually take that whole thing, or you can tighten it up and make it right, put it right there. This rally base rally with the gap up, and then you've got your market edge here. You've got this whole area here waiting, okay? Like this, maybe it does like that. Now, if it does something like this, which it might, we're breaking through structure here, right? So this would make it, if this happens, this would make it a come around trade, right? So it broke through structure, and what you would want to do is you would want to take that confirmation entry on here, right? Wait for it to go 50% of the way, then put your entry to go long as it's leaving here. Okay, and you can see it forms that reverse head and shoulders pattern. Soybeans. Okay, same thing here, right? Uptrend, cycling up, right? Starting to pull back. Momentum got a little weak here. And why is momentum getting weak? Well, it could be that middle time frame where we're running out of steam on that middle time frame. Running out of steam. We want to refuel somewhere below our line in the sand here, right? It's got to come somewhere below here to refuel. Maybe it's this little zone here. Let's box that out and see what we got. What does that look like on the lower time frame? That's pretty far away. 15-minute chart. Oh, where'd it go? I lost it. There we go. Okay. Pretty clear, right? What I don't like about it is that, this didn't break through any structure, right? Kind of came up, went sideways, and then went up. So we've got this consolidation here. Let's just make it purple. And it looks like that's where it's heading to first, to do something, to make some kind of move, maybe, right? But that is a retest of this consolidation here. This consolidation broke through structure. This is it's just a drop and a rally. 5-minute chart. It doesn't look too spectacular on that 5-minute chart either, right? It's just a bunch of consolidation here. So structurally, doesn't look so fantastic, but we understand the concept. We understand the concept of what we're looking at here. All right. So it's got to pull back, guys. If it pulls back into this area, it's not going to recalculate. It's going to become even more extended. 5, 6, 7, 8, 9. Oh my goodness. Right? If it pulls back into here, it's still not going to recalculate. Maybe it does a double top and then drops. But as of right now, what we would want to do as far as a strategy on the soybeans is not figure out where to go long, right? But to take advantage of this when we start to correct here. So when we start to hook back down, right, we've got momentum, Momentum is starting to hook back down. When we see this, do something like this, right? When we see our cycle indicator start turning red with momentum on our side, then we can take advantage of something that could look like this, right? Breaks down, catch some kind of supply zone up here, and then the move down to here, right? So maybe it breaks through this consolidation and retests that consolidation to the downside, right? Previous support becomes resistance and then the move down. That would be my best observation for soybeans right here. All right. All right, guys, it's 11 o'clock. That was a good 2-hour session there. So I would go rewatch the beginning part of this, do some practice today on following price using those lines and following price action and following that break of structure. Start counting those waves, right? Look at trend cloud like this and then remove it and then start counting, like 1, 2, 3, 4, 5, how close did we get? Oh, I see. Okay. 1, 2, 3. Just start training your eyes like that. Okay. And that's just always a great thing to do is follow price action. So put trend cloud on there, see how it followed the price action, then turn it off and then start drawing those lines, right? And do it just the way we did it today, right? Broke down, pulled back, broke through structure right there. Just draw it like that. And then just follow it. Oh, what did it do here? Okay. You get the picture. All right, guys. That was great. Great job today. Great questions. I will see you tomorrow, 9 a.m. Have a good one, everyone.